Hi, I'm Robbie.
And I'm Anna, production interns at FinTech TV, summer class of 2026. And you're watching Taking Stock.
Yeah,
That little thing.
2 minutes to go here into the closing bell. Welcome to Taking Stock. We are seeing stocks across the major market indexes essentially at their session lows. A fair bit of profit taking going on earlier on intraday here on the trading session. And as soon as we got that decision from the Fed at 2 o'clock, the press conference from new Fed Chairman Kevin Warsh at 2:30, we did see equities continuing under a fair bit of pressure into the closing auction. Peter Tuchman is back today, back here on the floor. What do you see? Because you've got info in terms of your buy side, sell side order books that we don't see. What'd you see happen today?
Coming out at 2 o'clock, we had $5 billion for sale on the close. That's majorly significant. My gut is that you've got people way overweighted in a lot of indices that have to close out by charter their positions tomorrow, okay? And so you've got guys who are in tech from January, February, March, whose valuations are 30, 40% more than they were based on just where the market is. And so they need to set themselves correct. Reconstitution of the Russell, end of the quarter, option expiration, a lot of those, plus the Fed meeting. I mean, I don't think anybody presumed we were gonna get any kind of a cut or a raise, but they were sort of teetering around that information. Great first Fed, but I think that's what this is all about. This is sort of putting themselves in check with them.
Thank you for being here. Time now for the close. And there you have it for your Wednesday, June 17th edition here of Taking Stock. We'll give you your final tail of the tape. The S&P 500 down 1.2%. That was not the tail of the tape all day, but it certainly is here in the closing minute of the day. The Dow down about 1%. The New York Stock Exchange Composite Index in negative territory, 1%, and the small caps down 0.7. Stocks turning negative after Kevin Warsh's first meeting and press conference as Fed chairman. No rate cut as expected, abstaining from giving forward guidance. He did not even give a dot on the so-called dot plot. Easing bias has been removed and announcing, among other news on the day, a new task force to overhaul parts of the Federal Reserve operation. For his take on what happened today and much more, let's bring in good friend of the show, Eric Criscolo, market strategist here at the big board. So, hey, I'll let you take this wherever you want, because when we have Fed Day, there's so much to do. We could do like a 3-hour special on the FOMC decision days, especially with a new chairman in charge. What did you see across the book into the close, especially after 2 o'clock?
Saw a lot of red. Saw a lot of red across the screen. You saw yields spike, especially the 2-year. It was up, I think, 15 basis points from the 2 o'clock press release through the press conference. So the market is obviously saying to everyone, the Fed is going to take rates higher. They're going to get in front of inflation. They're going to put it down to 2%. That's what we're hearing from Warsh. That's what he's saying. So that's exactly what the Fed did. They took the 2-year up 15 basis points. Interesting, 30-year about flat. So a lot of things you could read into that, but maybe that's a credibility call, saying, listen, we think the Fed is going to do what they've been saying that they're going to do. So now we're going to give the Fed some credibility, and we're going to keep the 30-year kind of stable while everything else is moving higher. So that might be a good thing.
I want your take on the task forces, because it's not just one. It's as many as 5 to overhaul parts of the operations for the central bank. Everyone had been wondering, what is the new guy going to come in? How's he going to shake things up? First of all, the statement was very short.
Very short.
Relative to the Powell era. Yep. But what do you make of some of the changes his first day officially here in charge in this capacity?
Yeah, I mean, during the whole nomination process, he had said, listen, there are things that I'm thinking about that I want to change, the way we collect data, the way we look at things, our framework. So he telegraphed that he wanted to make changes. And he's kickstarting it at this very first press conference by, like you said, rolling out those task forces. I think if you had a shot every time he said task force, you'd be passed out on the floor. So maybe we'll do a drinking game next time for that. But it was like this is not going to be your normal or what you're used to seeing the Fed do. It looks like there's going to be a lot of changes coming down the pipe across the organization. How they communicate, what's in the communication. Do they have dots, their famous dot plots? Do those go away? Maybe they do, maybe they don't. how they look at data, what data they look at. All this stuff is going to be looked at under fresh eyes, and we'll see how things change. He said that he expects the recommendations from these task force to come in by the end of the year. So we'll see.
It wasn't very long ago we had rate cut expectations.
Yes.
Now we're talking about rate hikes on the table. I think that could largely be what investors are reacting to. What has the underlying inflation data showed us that helped change the narrative from these FOMC members today?
Yeah, it's still elevated. The CPI, the PCE, the PPI, everything is still highly elevated, way above the Fed's 2% target, and it's been that way since COVID, right? So it's been a long time, and the pressure on, especially the lower income class, is getting greater and greater. Everyone is seeing it. Prices everywhere. Even if energy comes down, prices are still really high for a lot of things because they've been driven higher over the past 5 years. So the market's just saying, listen, we think that it's going to come down, or at least the Fed is really going to target it, and that's why you saw the 2-year just explode higher.
What do you have to say about artificial intelligence and productivity? You're also looking for what topics a new central bank chairman's inclined to talk about more frequently than his predecessors.
Yeah, he had mentioned productivity, again, in that lead up to his nomination, so that's one of the things that he is very, very bullish on. He thinks that AI can be one of, if not the most transformative technology that he has ever seen in his lifetime. He actually said that in his comments. So, productivity increases, that just helps the economy overall. It helps with inflation long term. It helps with employment. We'll see what employment does with that. There might be some near-term displacement, which we're seeing with the layoffs and some of these tech names. But longer term, that just shifts where the human capital gets allocated, new jobs open up, transforms the entire economy, like we saw with the internet, right? A lot of unstableness in the early 2000s when everything was just getting started. Then it just changed the entire economy, the way the world works. So these things can be very unstable for a little bit, but over the long term, they tend to stabilize and make things a lot better. So we'll see. He thinks that's going to happen.
I got about 30 seconds left. Other big catalysts you're paying attention to, you think our viewers would benefit from also watching closely?
So, I think we're going to be kind of in a little bit of a lull. Obviously, the big thing is going to be Friday. Do we get the memorandum of understanding officially signed?
Oh, right.
Iran, right? That has brought oil down sharply over the past several days. There is still a chance that something gets messed up and something doesn't get signed that should be signed. If that happens, does oil rip higher? So I think near term, it's just, can we get something started on the peace process with Iran officially, and then get to starting all those talks about what we're going to do with nuclear.
All right, Eric Criscola, market strategist here at the Big Board. My man, come back anytime. Good to see you. Happy Fed Day.
Knicks champs.
Knicks champs. That's it, dude. Knicks in 5. All right, here are the top analyst calls here that move the day. Hello. That move the tape on Wall Street. First up, Bernstein starting coverage on GE Vernova at Outperform. They say the stock has plenty of upside, shares up 50% on the year. Next up, MoffettNathanson reiterating Netflix as a buy, but lowering the price target to $115, back to where it traded 7 months ago. Finally, Rothschild and Redburn upgrading Lyft to a buy from neutral. They say shares are compelling at current levels, despite not having the same scale advantages as Uber. All right, we got time here to take a look at one stock here, Jeff, that calls the New York Stock Exchange its home. It is shares of Figma, down big for the year, but up nicely for the day, almost 4%. The design software name getting a boost from Citi despite the AI disruption narrative that has totally hammered the stock as of late. Analysts initiating coverage with a buy rating. Price target $36. That is 88% upside off these current levels for a stock that is down 50% year to date. The 2026 FIFA World Cup deploying the largest live AI system ever used in professional sports. Here's part 2 of Cheddar's Chris Castellino going inside the tech with the man who's deploying it.
The 3D avatar system is just one layer of what Lenovo is running. There's also the Smart Ball with embedded sensors transmitting movement data in real time. There's the referee's body camera, now AI stabilized, so the footage can actually be used in broadcast. And there's a network of venue systems, all feeding crowd flow, turnstile data, and security intelligence, all across the 16 stadiums.
Our entire AI strategy is built on what we call hybrid AI infrastructure. Think of that as distributed data, distributed devices, and distributed compute. All of that needs to be orchestrated in real time, if you will, and happen both reliably and by also preserving the security and privacy requirements that one might have. Some of the technologies that we're bringing to this summer's tournament, we have tested out at last year's Club World Cup. So both of our infrastructure, the data, the analytics, and AI technologies from hardware to software have been heavily tested in the same set of stadiums in real-time game environments prior to the tournament.
While the officiating technology gets the headlines, there's another AI system that may have longer-term consequences for the sport itself. It's called Football AI Pro, a frontier AI model trained exclusively on terabytes of football data. We're talking match footage, player positioning, ball movement, tactical analysis across all competitions and nations. And here's what makes it interesting. Each one of the 48 competing teams gets access.
I am particularly excited about the equity angle, kind of leveling the playing field. It allows real-time decision-making support if you want. It allows pre-game strategic analysis, if you will, tactics and things of that nature. It allows visualization of the game data if you want to develop tactics and or special training programs for a particular game as you get ready, etc. Scenario generation. Some of the heavyweights of football may already have access to similar technologies, if not the exact one. But especially with this World Cup with 48 teams and a lot of small nations participating for the first time, I think it gives everybody access.
For all of this innovation, there is a legitimate question underneath every algorithmic decision. Do fans who grew up watching the game really want a computer deciding a World Cup final?
So I do understand, on one hand, the skepticism about that. But I think as technologists, we also have the responsibility to position it the right way, that the ultimate decision maker is not the AI, it's the human.
Every piece of data generated from the World Cup has potentially enormous value. Think video games, broadcasting, even sports betting. Where does this all go after the trophy is lifted?
The specific player data rights expire when the tournament expires. From that perspective, the rest of the data, the match footage, the physical positioning, the ball data, the physics data, etc., that exclusively belongs to FIFA. In terms of what those commercial pathways might look like, it's a discussion that we need to have with FIFA following the tournament.
This tournament is proof of concept, but not just for soccer. That same AI architecture that Lenovo is running maps directly across every industry.
Some of the fundamental capabilities that we will develop for sports are also going to be leverageable and reusable in other verticals and other use cases and applications. Smart cities, retail, manufacturing and supply chain. There is almost no industry and no vertical that is immune to it.
And while the algorithm doesn't care which team wins, the man running it does.
So I was born and raised in Turkey. And Turkey has qualified after 24 years for the first time. So beyond all the technology and all the pressure and all the excitement that comes from that, as a fan, I am super excited about Turkey being in the tournament.
So tell us, to help decide the outcome of a World Cup match, and which country will win it all? Drop your answer in the comments below. For Cheddar, I'm Chris Castellino.
Welcome back to Taking Stock on this Wednesday afternoon Fed Day edition. Iggy Iope joins us now. It's not his first time here on Taking Stock, but it is his first time in a long time. Nice to see you again.
Great to see you again.
Iggy, the
Glad
CIO at Theo. You are, of course, building the infrastructure that helps make Wall Street assets available on blockchain networks. Before we talk about your role in tokenization, how about your takeaways from Fed Day today with Mr. Warsh?
I think the very fact that the speech happened is already great news. It's a great catalyst because market hates uncertainty. And Kevin Warsh was very quiet on purpose. So just the fact that he said something already removes one of the major blockers for the market. And then my second thought is the market is really focused right now here on the floor of New York Stock Exchange, dissecting every single word. We'll go to focus on the big picture, the medium to long term. The Fed is still extremely easy. Yes, they removed the easing language, but every day that they're not tightening, they're actually easing because inflation is quite high. Headline PPI was at 6.5%. Headline CPI was 4.2, that's well above the target. The job market is on fire. We created more than 500,000 jobs in the last 3 months alone. So based on these parameters, according to our models, the Fed should be anywhere between 1 to 2.5% higher right now. And right now, they kind of got it for like maybe one rate hike by end of the year. That's why every day that they're not tightening, they're easing, and that's very bullish for all risk assets.
On the backdrop of this environment, for this FOMC, a lot of familiar faces there, but of course a brand new chairman. How are you thinking about and positioning for potential for higher rates, strong dollar, gold where it is versus where it could be? How about some of those conditions?
I think you got to pursue a barbell strategy. Given that the rates are way lower than where they should be, right? So it's very bullish for risk assets. So the market is chasing the dream, but the market is also hedging the dream, right? Chasing the dream, that's a SpaceX, crazy valuations, the micro caps going nuts. On the other side, the hedging on the dream, you have things like gold. So in terms of how Theo is positioned, is we're focused on our core three products, which is short-term treasuries, T-bills, gold that actually pays you yield, and then the third one, which is the gold-backed stablecoin that pays you even higher yield backed by the gold carry trade. But all three products are designed to be hedges in this kind of a buoyant market, but the hedges that actually don't cost you, the hedges that actually pay you, and yet provide a risk diversification.
For your general lane of tokenization, I know you specialize in, is there a particular asset class that you think is ripe for full, effective, transparent tokenization first before anything else?
I'm most bullish on gold that actually pays you yield, because right now the rates are going to go up. They're going to go up slower than they should, but at the minimum they're staying pretty high. So just holding gold that doesn't pay you yield is not as good as having gold that actually pays you a little bit of a carry. And that's something that's very, very new, right? For 6,000 years, people have been using gold, and for most of the time it costs you something to do it. So, TH Gold, which is what we launched, is gold that has native yield that comes from leasing out the gold by securing the title. It's sort of still extremely safe, double insured and all that, but it's actually gold, which is a diversifier. It is a rainy day hedge, but it also pays a yield, so it's somewhat competitive with the dollar.
I got about 30, 40 seconds left before I let you go. How about your outlook, your guidance, expectations for the second half of 2026?
I think in the near term, especially for cryptos and gold, there is no immediate catalyst. So that's why I'm saying you've got to focus on generating the yield. I think on the risk assets, it's still very bullish because, like I said, every day that they're not raising rates, they're actually easing. So right now the conditions are extremely easy, and it's going to continue to be so for the next few months.
Iggy Iope, CIO at Theo. Welcome back to the show, my friend. It's been a while. You come on back and see us anytime.
With pleasure.
Take good care. All right.
Great. Thanks for having me.
A lot more taking stock after the trade for the New York Stock Exchange right after this. That was great. Welcome back to the show. It is time now for one of my favorite segments of Taking Stock. Not just speaking with an amazing guest, but a guest who just rang the closing bell. Say hello to Ara Hovnanian, Chairman and CEO at Hovnanian Enterprises. Sir, what a pleasure. Thanks for taking some time for us today.
Absolutely. Happy to be here.
I know you've been down here at the New York Stock Exchange. What's it like to come back and ring the closing bell for the markets today?
It's wonderful. This is our 25th anniversary. We've been back a couple of times, but it's a very special milestone.
Today was a really interesting day, and I want your take on maybe what you were maybe able to catch out of Kevin Warsh and the Fed, because you happen to be a master in a very rate-sensitive sector.
Yes.
Your stock today was up almost 3%. All things considered, given where stocks reversed to, not a bad day.
Yes.
And you are the best performing home builder year to date, up almost 30%.
Oh, thanks.
Let's start with the growth success. What do you attribute it to so far?
Well, we have obviously a great team. We have a great strategy, not all of which we talk about publicly, but we just have a great team all around the country serving an important niche.
How do you now think about a federal open markets committee that has now suggested and in a lot of ways broadcast that rate cuts are not on the table, we're closer to interest rate hikes than anything else?
So interestingly, short-term rates are not really something we're focused on. We're focused on long rates. So it's possible that long rates, because by the way, we're interested in them because of our customers. Mortgage rates depend on long rates. So maybe this will help long rates over the near term. We'll see.
I wonder what the communication looks like from your customers. What are their main pressure points, their pain points in the broader housing conversation across the U.S.?
Well, clearly affordability. I mean, housing costs have gone up for a variety of reasons. Land has gone up and mortgage rates have gone up. When you combine price and mortgage rates, it creates an affordability challenge. But we're helping that with our customers. We're helping in many cases to buy down the rates to help with their affordability.
How would you diagnose or how would you describe even the state of the housing market in the United States halfway through 2026?
We are still below normal production levels. So we have started from the trough after the great financial crisis and have been slowly coming back, hit normal for 1 year, and now we've just been treading water below normal. So I think a lot of opportunity. We're seeing a lot of foot traffic in our offices. Our websites are very, very busy, more than normal. So we think there are a lot of customers that are interested. They're just hesitating at the moment to pull the trigger.
I wonder if one of those reasons is because of housing supply. That's been a big pressure point nationally. It changes market to market. What have you seen there? How have things gotten better, if at all?
Well, housing supply is slowly increasing from the last year. Having said that, we're still about 40% below normal in terms of existing homes and new homes that are available for purchase.
What needs to change in order to help bring that into better balance? Some of those main pressure points you very closely track with your team. Do you think the average would-be home buyer out there is struggling with and desperately seeking some answers?
Yeah, the key is affordability of land and availability of land, which is controlled by many, many different governmental bodies all around the country. So very challenging to solve on a national basis. It's town by town, county by county, state by state.
So let's talk through some of those kind of county by county, state by state. Are there particular parts of the country that most make you enthusiastic right now in terms of where the housing conversation is? Where are we seeing success in the U.S.?
It's interesting because it varies dramatically from 1 year to the other year. But at the moment, we're seeing great success in New Jersey, right outside here, Delaware, Washington, Virginia, Maryland, down the coast to the Carolinas and coastal Georgia. Those are probably our strongest markets altogether. Not long ago, it was California, Phoenix, Texas, Florida, but those are all slower right now, and these East Coast markets have been the strong ones.
About your guidance, your expectation, forecast for the back half of 2026 for your industry, Ara?
We're projecting for ourselves a better back half than the front half. We're about to close out our third quarter, and we think our fourth quarter is going to be the strongest, which is traditionally what has happened with our company.
Ara Hovnanian, I always say it's a great interview when I'm out of time, and I still have more questions to ask. That means you got to come back and see us again. What a pleasure, sir. Take
Thank
care.
you. Thank you very
Ara
much.
Hovnanian of the one and only Hovnanian Enterprises. Don't go anywhere. A lot more taking stock coming up right after this. Awesome. Very good. Welcome back. Time now for a few headlines in the world of fintech, crypto, and artificial intelligence for your Wednesday afternoon. First up, Bitcoin down 2%, right around 64,300. ETH and Solana both down 3%. Next up, a $120 million betting market on Polymarket is being disputed after traders clash over whether the U.S. and Iran reached a, quote, permanent peace deal by the deadline for that contract of June 15th. Finally, the SEC proposing to eliminate the 2-decade-old trade-through rule. It's a move that could better clear the way for crypto firms to expand the trading of tokenized stocks. And now, Money 2020, Scarlett Sieber is back to explain the ways that fintech companies actually make their money. Take a look.
I'm Scarlett Sieber, Chief Strategy Officer here at Money 2020, and this is how fintech companies actually make money, where global operations get expensive and they get expensive fast. Today we're going to be talking about Tipalti. Tipalti helps companies pay thousands of suppliers across currencies, countries, and tax regimes. So how does Tipalti actually make money? First, per payment fees. Second, FX spread on international payouts. And third, compliance monetization. Tax forms, onboarding, audit readiness, all these things that really matter and can add up a lot from a revenue perspective. Global payments aren't hard until they are, and when they get hard, they're existential. Tipalti sells certainty at scale. So that, my friends, is how Tipalti actually makes money, by charging for eliminating operational nightmares, which is not an easy thing to do, which is why they can make the big bucks. Have a fintech company you want featured? Drop it in the comment, and it might just make the cut. In the meantime, back over to you.
And a very special thanks there to the one and only Scarlett Sieber of Money 2020. Your final tail of the tape on this Wednesday afternoon down here on the trading floor of the New York Stock Exchange. The S&P 500 down 1.2%. following that FOMC decision at 2 o'clock in the Kevin Warsh press conference. The Dow down 1%, the New York Stock Exchange Composite Index also down 1%, and the small caps in negative territory, 0.7%. Tomorrow here on Wall Street, we will get the weekly jobless and continuing jobless claim figures. In the morning, the latest quarterly results from Accenture and Kroger, and at 10 a.m., the first ever New York Knicks championship parade down the Canyon of Heroes right outside the New York Stock Exchange. Thank you for watching today's edition of the show. We'll see you again tomorrow.